Namaste and welcome to ratio analysis based on net worth under simple solution series. We will be dealing with two problems which appeared in 2017 December and 2017 June, both involving proprietors funds, and therefore the proprietary ratio is relevant. All figures are identical except for one problem deals with fixed assets divided by proprietors funds. The other thing deals with proprietary ratio, and there is a small change in the amount of bank overdraft, which is not material, but the problem involves a bit of intricacies which we will deal with. And since this leads to proprietary ratio, it is timely that we refer to our video on concept and take out the explanation and inference in respect of proprietary ratio, which is followed in the next slide. This ratio which we are talking of is proprietary ratio. Proprietary ratio means shareholders' funds divided by total tangible assets. Effectively, it means how much of the tangible assets are funded by the shareholders. And it's a variant of debt equity ratio. Spirit is the same: how much you hold in the company, how much external people hold in the company. We are taking up the problem of December 2017. As a first step, we will be posting the figures either into working notes or into the statement of proprietors funds proper, so that everything is put in its place before we start working on derived figures. Just to current ratio 2.5:1, we take it to working notes. Proprietors assets, proprietors funds and fixed assets, we will take it up subsequently because it comes in the second stage. Liquid ratio, we will take it into working of liquid ratio under working note. Bank overdraft is 10,000. We straight away take to proprietors funds. And we have reserves. Bank overdraft also will be taking into account into the working notes. That will help us in finding out what is liquid liabilities. We have reserves and surplus 80,000, which we will post into the proprietors funds. And we are also given working capital 1,20,000. With these figures, we will be starting with the current ratio. We have posted requisite figures into our workings. Now, current ratio is equal to current assets divided by current liabilities. And the ratio is 2.5:1. We will just write one below the other. Current assets, if it is 2.5, current liabilities, which is B, is equal to 1. And they have given us 1,20,000 as working capital. What is working capital? Current assets minus current liabilities, or A minus B, is equal to working capital. Same logic here. 2.5 minus 1, 1.5 is equal to working capital. 2.5 is current assets, 1 is current liabilities, 1.5 is working capital. If 1.5 is working capital, the absolute amount is 1,20,000. Now you know what we are going to do. If 1.5 is equal to 1,20,000, how much is 2.5? That will be current assets. If 1.5 is equal to 1,20,000, how much is 1? That will be current liabilities. This is exactly what we are doing. Therefore, current assets equals 1,20,000 divided by 1.5 multiplied by 2.5. That is the value of current assets. We have derived the figure. Similarly, If 1,20,000 is equal to 1.5, how much is 1? That is 80,000. In the process, we have derived now from working capital and the current ratio, how much is current assets and how much is current liabilities. That is a good achievement. Then we have got the current assets and current liabilities. We have to refine it further because we have given liquid ratio. What is liquid ratio? Liquid assets divided by liquid liabilities. The ratio is given as 1.5:1. What is current liabilities? We have derived here as 80,000. What is liquid liability? Liquid liability is current liability minus short-term borrowings like bank overdraft, bank cash credit, these two figures, and very short-term loans. We have been given bank overdraft of 10,000. If we remove 10,000 out of current liabilities, we have got liquid liabilities. And if you have liquid liabilities, can you derive liquid assets? Of course, because the ratio says liquid assets divided by liquid liabilities is 1.5. Therefore, if we put a formula, liquid assets means take 1.5 and here liquid liability is dividing. When you take it to the other side of equation, it will multiply. Liquid liabilities into liquid ratio is equal to liquid assets. Means now we have got liquid assets also. We can split current assets into liquid assets, and the difference between current assets and liquid assets has got to be inventories. These are the two figures which we need to get it. Let us see. Let us bring it up to liquid assets. We will take up the balance separately. Just to say, we have got 70,000 as liquid liabilities which we have derived. Let us post it there. It is a derived figure, therefore in green. Whatever is given figure is in yellow. Then we have got 1,05,000 as liquid assets out of current assets. We know current assets is 2 lakhs. Liquid assets is 1,05,000. And we will see here simple calculation of 2 lakhs current assets, liquid assets is 1,05,000. Therefore, inventory, which will be the differential, is 95,000. Now that 95,000, we make a posting into the statement of proprietors funds. Then comes this particular item which we had left. We have kept it at the end. What does it state? Fixed assets divided by proprietors funds, fixed assets divided by proprietors fund is equal to 0.75. Now you have to note one specific thing here. There are two things missing. Equity share capital is missing. Fixed assets, plant and machinery and other fixed assets, which is missing. When there are two items missing, we have to presume one as a constant. We take equity capital to be equal to X. If you take equity capital as equal to X, what is proprietors funds? Proprietors funds is share capital plus reserves and surplus. If this is equal to X, proprietors funds will be equal to X plus 80,000. This is what we are saying here now. Equity share capital is X. Reserves and surplus is given as 80. Therefore, proprietors fund is equal to 80,000 and also X. X is what we have presumed an amount. Then the question comes, what is fixed assets? Go to the formula. Fixed assets, keep it as it is here. Take proprietors fund, which is dividing here. When you take it to the other side, it will be multiplying. Numerator and denominator, it shifts. Therefore, fixed assets equals 0.75 multiplied by proprietors funds. 0.75. What is proprietors funds? proprietors fund is net worth. We have defined it here as 80,000 plus X. Multiply it. When you multiply and further squeeze it, 0.75 into 80,000 is 60,000. 0.75 into X is equal to 0.75X. Now, we have got share capital. We have called share capital as equivalent to X, and we have called fixed assets based on that X as 60,000 plus 0.75X. What we will do? We will make a posting. In place of share capital, we will put it as X, and in case of plant and machinery and fixed assets, we will put it as 60,000 plus 0.75X. In that case, how does it work out now? If we take a total of these, it becomes 1,60,000 plus X. And if you take total on this side, it becomes 2 lakh plus 60,000 plus 0.75X. Now, we know for sure in a balance sheet, asset is equal to liability. Means if you put an equal sign here and then say 1,60,000 plus X is equal to 2,60,000 plus 0.75X. This is exactly what we have done here now. Total assets is equal to 2,60,000 plus 0.75X. Total liabilities is 1,60,000 plus X. Since asset is equal to liability, our equation becomes 2,60,000 plus 0.75X is equal to 1,60,000 plus X. Now, if we shift it, this is plus here. When we change the side, it becomes 2,60,000 minus 1,60,000. Here it is plus 0.75X. Take it to the other side, it becomes minus. Effectively, your final equation becomes 2,60,000 minus 1,60,000 is equal to 1 lakh. 1x minus 0.75x is equal to a quarter x. If quarter x is 1 lakh, x is equal to 4 lakhs. This is a simple simultaneous equation which we are all aware of in the day-to-day thing. This equation has to be used in this exercise. Once you do that, now you know capital is equal to X, means 4 lakhs will come here. And this is 60,000 plus 3/4 of X. 3/4 means 3 lakhs. This is 3,60,000 and this is 4 lakhs. As simple as that. We go to the next sheet and we know that X is 4 lakhs. Post it. And this is 60,000 plus 3/4 of X. That is 3,60,000. Total comes to 5,60,000. 5,60,000 because it is derived from an equation, and that is the solution that we have got, which we need to present it as the balance sheet and the working notes. This is the first set of problem which intentionally we took one involving equation which was slightly difficult for the sake of making it understood very clearly. Now, this is the time to go to next problem. We have covered December 17. Now let us go to the June 17, where instead of fixed assets by proprietors funds, it is simply given as proprietary ratio is 0.75. It is not difficult. It is once again as simple as we have seen the other way, and let's get into that. Here also we follow the same approach. We post the figures as given. Working capital, reserves and surplus 80,000 given, bank overdraft 20,000 given. We are given current ratio as 2.5. We are given working capital as 1,20,000, and we are also given liquid ratio as 1.5. we just repeat what we did in the other problem. 2.5 is current ratio, which is nothing but current assets divided by current liabilities is 2.5. If current asset is 2.5, current liability is 1. Working capital is nothing but A minus B, which is 1.5. If 1.5 is 1,20,000, how much is 2.5? That is our current asset. And if 1.5 is 1,20,000, how much is 1? That is 80,000. Same as the previous problem. We have got current assets and current liabilities. Once again, coming back to liquid assets and liquid liabilities, same ratio we apply. Current liabilities we have got here as 80,000. We post it here. There is a bank overdraft of 20,000, which we have posted here. And therefore, the difference between the two is liquid liabilities 60,000. If liquid liabilities is 60,000, since liquid assets is 1.5 as divided by liquid liabilities, that is liquid ratio, multiply it by 1.5 and you get liquid assets. And once you get liquid assets, you get inventory also, as we have seen the other time, 60,000, and we post the liquid assets. We move to next page and then say current assets were 2 lakhs, liquid assets is 90,000. Therefore, the difference is 1,10,000. Once that is posted, now we are left with equity share capital and plant and machinery. Proprietary ratio is given as 0.75. Let us take up the working. 0.75 is the proprietary ratio. What is proprietary ratio? Proprietors fund divided by total assets, or proprietor fund divided by total liabilities. It goes without saying because total assets is equal to total liabilities. Therefore, take the liability side. Liability side, if you take this total as 1, total liabilities minus proprietor's fund is equal to other liabilities. Means the first two are proprietor's funds, share capital plus reserves and surplus. Other liabilities are liquid liabilities and bank overdraft. What it says, this is 70.75. If this is equal to 1, then your other liabilities becomes 0.25. 80,000 becomes 0.25. It is easy for us. If 25% is 80,000, full amount is 3,20,000. This is exactly what we are doing here. If other liabilities, this is proprietor's fund, this plus this is equal to 100%. If this is 75%, equity capital and reserves and surplus, then liability and bank overdraft are 25%. We have the figure as 80,000. If 80,000 is 25%, proprietor's fund is 75%. How much it is? 3 times 2,40,000. And we have got 80,000 as the reserves and surplus. If we remove this, we get the capital. Total of these two is 2,40,000. If we remove reserves and surplus, we have got equity capital. Equity capital is nothing but proprietor's fund minus reserves and surplus. Just to see, our capital is going to be 1,60,000 and total of the side will be 3,20,000. 25% is 80, 100% is 3,20,000. From now on, it is simpler and easier. It's a simple logic of accounting. Total assets equals total liabilities. We know total liabilities is 3,20,000. Current assets, and this is going to be assets equal liability 3,20,000. We know current assets as 200,000. Balance is 1,20,000. This is more simpler than the previous one, but both are required because they appeared in consecutive exams and quite interesting problems. With this, we have got the values as 3,20,000, and that takes us to the end of the solution. Having completed the summarized statement of assets and liabilities, we just present the final answer along with the summarized statement of assets and liabilities. Working notes of 1, 2, 3, 4 and 5. This is just for space planning it is done. If we submit it, our problem is solved 100% with the proper understanding of proprietary ratio, proprietors fund, and all the intricacies involved, finding out the missing one. It is just like an enjoyable crossword. And thank you so much. Thanks a lot.